Hello everyone. Today, let's understand why Netflix stock fell after its latest earnings report and why the company decided to change how it shares information about its viewers. To start, let's talk about an earnings forecast. This is a prediction a company makes about how much money it expects to earn in the coming months. Think of it like a student telling their parents what grade they expect to get on a big exam. If the student predicts an A, but then brings home a C, the parents might be disappointed. When Netflix told investors that its future earnings might be lower than expected, the stock price dropped. A stock is a tiny piece of ownership in a company. If you own stock, you own a small slice of that business. Why does this matter? For ordinary people, Netflix is part of our daily routines. We use it to watch movies and shows. But for the stock market, Netflix is a business that needs to keep growing to keep its investors happy. When a company says it will give fewer engagement updates, they mean they will stop telling the public exactly how many people watch specific shows. They want to focus on their overall profit instead of just the number of viewers for one show. Here is a household example. Imagine you run a lemonade stand. You tell your neighbors that you expect to sell 100 cups of lemonade next week. But then, you realize you don't have enough lemons. And you tell them you will probably only sell 60 cups. Your neighbors, who were planning on buying your lemonade, might start looking for other drinks instead. In the business world, when a company lowers its expectations, people who own the stock might get nervous and decide to sell their shares. For investors, this news creates uncertainty. Uncertainty means that people are not sure what will happen next. When investors are unsure, they often sell their stock to be safe. This is why the price can drop quickly. It is not necessarily because the company is failing, but because the expectations were not met. One important point to remember is that stock prices move for many reasons. Sometimes, a company can have a great product, but the stock price might still fall because the market expected even better results. This is the difference between a company's performance and the public's expectations. Opinions differ on whether this change in reporting is a good idea. Some analysts think it helps the company focus on the big picture, while others worry it makes the company less transparent. Transparency means being open and honest about how a business is doing. To summarize, Netflix stock went down because the company predicted lower earnings than what people were hoping for. They also decided to stop sharing as many details about which shows are popular. This reminds us that in the world of finance, what people expect is just as important as how the company actually performs. It is a good reminder to look at the whole picture rather than just one piece of news. Markets change every day, and prices move based on a mix of facts, predictions, and feelings. You for watching. Subscribe for more useful finance information. Thank you for watching.